Hi, and welcome to a stocks and shares purchase update in the month of August. And the other, obviously, special thing that happened in August 2025 was Oasis being on tour. Now, I know some people might have caught them in July, but I caught them at Wembley at the start of August, and there's Mr. Gallagher performing live. So the fact that I managed to spend £1,000 on shares when Oasis was in town with all their merchandise is quite impressive. The willpower of not spending it on Oasis linked merchandise. Anyway, the £1,000 spend is actually very material for me because my portfolio, if you look at my earlier videos, I've only had it open since about mid-June, so it's been going now for a couple of months. So it was coming in at around 1,500 to 1,750. So £1,000 spend in 1 month is the biggest month I've spent. I was holding cash back to spend, and I definitely did that. And this goes in part of my own strategy of trying to, people might say it's time in the market. I see it no different of going into, let's say, a record store, and you see a record, it's just come out, and it's £40 or $60, and you want it, but you know it's going to come down in price, and if you just wait, you'll get it for a price you can afford. And that's pretty much how I do it with the shares as well. I have a buy amount for a range of shares, and if the share book drops below that, I'm in and I will buy to a certain amount. And if it stays above, I stay out. Irrespective of how much I might want the stock, it's still got to be at the price I want to pay for. Please don't take this as investment advice. Do your own strategy, do your own research. But here's just a small portfolio and what I bought for it. Now, I have already put earlier this week something about Greggs and why I think Greggs is a good buy. Please look at that video if you're interested. I won't go into all the reasons here because I've done that on the previous video, but as it says there, I've bought a further 20 shares, so I've moved my portfolio from 30 to 50 shares now in Greggs. That's cost me another £313.50. Bought in, see, the average is good at 15,675. Once again, it's brought my overall average down to something like £16.44. And if Greggs fall again, I will try and release some funds to bring that average down further. Also quite happy to share the stamp duty that we have to pay here in the UK. So that's £1.56, and I have to claw that back. I see this in any stamp duty costs. I will have to find money to offset it. And I'm quite happy when I do the portfolio update, when the August one is due a couple of days' time, to show what all those stamp duty costs are. But yeah, my shareholdings now has gone from 30 to 50, and with a 19p per share payout, and it goes ex-dividend, I think on the 11th or 12th of September, 19p times 50 shares, that's a good dividend coming through for Q4, I think it's going to come through. I've gone into Land Securities. It's something I'm looking to diversify my portfolio so it does pick up a REIT, and I've gone in for 50 shares at £5.71 for all intents and purposes, just to broaden my portfolio. Land Securities used to pay quarterly, and now they pay half yearly. So I know anything coming from Land Securities, any dividend will be paid out January next year now. So I've just got in there. That's a holding position, and I'll see how that performs. I just wanted to read on the portfolio, and it came in at a price which I thought was reasonable. Taylor Wimpey. Once upon a time, I could have bought Taylor Wimpey for below 50p. So the fact that I've got that now it's worth just below £1 is something else. Now, obviously, I haven't bought at £344.89p a share. What that should say is it's more like just under 99p a share. I think it was £98, 98 pence and something. So I have bought Taylor Wimpey, 350 shares. They do have a dividend payout of 4.67 pence, I think it is, so just below 5 pence per share. That's coming out, and I think it's being paid in November. So once again, that will be a nice dividend in the second half of the year. And the last one, purely because it went just before it went ex-dividend, is Aviva. I will look to build on my shareholdings in Aviva, very strong insurance company here in the UK, very good dividend payer, and they bought out Direct Line, so they have a very commanding position in terms of general insurance here in the UK. I'm going to look to increase my holdings, but I'll be looking at doing that at a lower price than 674. I got in here just to take advantage of the 13p per share dividend that's going to come out. I am motivated by dividends. Probably should have held off, but I'm quite happy to pick up that dividend and look to reduce that overall 674 pound per share down to something more attuned to below £6.50 per share. But obviously that will take some time to do. So those are my purchases. All of those purchases were over £1,000. My portfolio now stands around 2,500, so it's a small portfolio. And in a next video, I'll be talking around what targets I'm setting for both 2025 and 2026 in terms of dividend, in terms of the stock I've got. I'll also touch upon the fact that I do have ETFs of growth, so I try and balance both dividend and growth. And I'm also going to do a portfolio update. So if any of this was useful, please click the like button. Please subscribe. Like I say, my portfolio is a small portfolio, standing at around £2,500, and fingers crossed both for the purchases I've just made and whatever investment decisions you make over the next few weeks for your stocks. Let's all hope those share prices keep on going up. Until next time, take care and look after yourself.